let's wait for another short setup. So we cannot always master everything, especially with MetaTrader. You can see for the pound kiwi, the size of the bar is 10.9 pips. We can, of course, divide that number by 2. Similarly, 9.6 pips for the pound Aussie seems a bit large. We can divide it by 2. So the chart will be faster, of course. A short setup may prepare as a remo for the pound Aussie here. I will represent with these two aqua line my stop loss and my entry level. But we have to wait for the bar to close, of course. Okay, so we have the setup bar, so the entry should be somewhere in this area. Let me check carefully. Yeah, here. 17.7, 15.7, so 15.7. So the entry must be considered as being done. So right here, so we can mark the entry here. Why have I my line as ray? Okay. The stop loss is in this area, so we have a stop loss size of 18 plus the spread. The spread on the pound Aussie here is 3 pips, so 18 plus 3, so 21 pips. So we can write here ESL 21 pips. And so the entry, as you can recognize, is a remo. So when we have some time, we can mark the chart appropriately with the conventions we use for the max. That way, for the entry setup. And so we have here a short remo, ETF remo. You can observe that we could have considered it as a breakout remo because the Bollinger Band were flattening, but for just one candle. So I prefer to continue to consider it is we are in a trend mode. And now the price is moving in our favor. Is it a good moment to adjust the stop loss? The stop loss size was 21 pips. And as you know, I have a discretionary decision when to make my first MX. And my first MX will be made with a minimum profit of 10.5 plus the spread, so plus 1 pip for the break-even plus 1. Half for the first unit, half of the stop loss size, so 10.5 plus the spread. The spread is 3, so 13.5. So 13.5 will be in this area. So I will make a profit if I get an exit setup, so on or below this line, this blue line. All the other exit setup, like this one, for example, we have a clear Tiger Tunnel rejection. I will ignore them. Okay. As you can see, we have at the same time an entry setup here, not entry setup in the pound US dollar. We have an entry setup on the pound CAD. Also, we have an entry setup on the pound kiwi. So we have plenty of opportunity to go short on these pairs. So let's consider a second one. I will not take the pound kiwi because the pound Aussie and the pound kiwi are very similar and they represent basically the same trade. Let's consider. Let's say we can take the pound CAD or we can take the pound US dollar, so whatever we want. And so here with the pound Aussie, if you take an MX here with the Tiger Tunnel rejection, you would have banked a few pips in profit, so around 5 pips profit. 5 pips profit approximately, reducing the risk on the position. You know that I like to use this discretionary decision because my risk, the risk I take usually on my trade is very small, maximum 1%. And so I do not worry if I have to close my trade on the initial stop loss because losing 1% is not a big problem. So given the fact that we have a nice winning rate with the max when we apply the rules correctly. So now when you trade with the SAM chart, do not try to handle too many trades simultaneously. So 2 trades is, in my opinion, a good number of pairs, especially if they are in the same direction. This does not mean the pair must be correlated. Of course, because here I'm using the pound pair, they are all correlated. And so taking 2 trades in the same direction is essentially taking the same trade. But with, for me, a clear short context on the pound pairs, I don't mind to have 2 trades in the same, 2 similar trades, in fact. So let's see here the pound yen. Pound yen seems interesting. We may have a re-entry here on the pound yen. If this candle closes as a red candle, we will have a re-entry, and I would place my entry somewhere in this area, and my stop loss should be somewhere. So this will be a large stop loss. I will place my stop loss somewhere in this area here. You see, there is some volatility, so no big movement, but some volatility. The price can make a very big pullback. You don't need to fear this kind of pullback when the price is volatile. So, and this is why it is important to have a stop loss far enough, rather far enough from your entry. And this is what happened most of the time when we don't have a good non-farm payroll. So when there is no clear direction for the price to move, so we may have movement in both directions, so no clear bias, but some volatility. And this volatility may be so high in comparison to the momentum of the price that when you take a trade, you have the risk for the trade to be closed with a loss until the market stabilizes, and then you can make some more interesting trades. Even if I don't expect today, due to the non-farm payroll numbers, big movements. So. What is happening on the other market? Let me check on a second platform I have. So all the indices, if you look on the indices, so the S&P 500, the Dow Jones, the Nasdaq, they have all made an important jump to the upside. Similarly in Europe with the FTSE 100 and the DAX, the German DAX, but now the price seems to retrace, so the market is calming down. And so the market is probably estimating that the non-farm is not encouraging, and we see, but at the same time we see that gold is going down. And for the other instrument, it's not very clear. So not a very clear situation for the moment. And you can see the price comes back. So don't fear this kind of break, and don't be tempted to close your trade simply because you see the price is retracing against you. Follow the rules. Follow the rules. We may have a pound card setup. So we have the choice between the pound yen or the pound CAD. So let's see, the first one which will happen, I will consider it. But we have to wait for that the candle to close first. The VINI will be up, so this red candle will not be normally a valid entry setup. Now, if you are afraid to use, or if you are not comfortable to use this kind of discretionary decision, so here you would have had a first exit, and then, of course, on this second low, the price is making another time window bottom with this candle, this blue candle here, or the next one, this one. We have several exit setup triggering. We have the non-lag moving average, most probably no, not yet, but we have a bottom in the green VINI, we have a bottom in the Stochastic RSI. This would have been another exit setup, and so you could have possibly consider making your exit in this area on the second unit. So a small profit on the first unit, a small loss on the second unit, but with the spread most probably a break-even trade. So just after the non-farm payroll. So this is what happens when the non-farm is not convincing. And before the trend to resume, sometimes we have to wait for such kind of volatility to settle down. And because the volatility is a non-directional measurement of the price action, or some aspect of the price action, the movement can be on both sides. Because the volatility doesn't care to the volatility if the price goes upward or downward. And so sometimes we may have deep pullback like we are seeing in the pound yen. And you see now the price is moving. You see, having the right context is extremely important. So here we can make, so in this area, we have to consider, so to make an MX. Okay, here I would have made an MX, okay, with the MTM. Here I would have made an MX with this divergence in the Stochastic RSI, or at least this bottom. Not fast enough with this one, but fast enough with this one. So where 3 pips exactly in this area, okay? And now with the price moving that way, so now we can consider adjusting. We can consider adjusting the stop loss to protect, in fact, the profit on the trade. And to adjust the stop loss, so we can use the max price channel, keeping a distance large enough. So with such a volatile pair, I will take around 10 pips, or perhaps even more. I will use instead the rule of 2 levels of resistance. So the price is here, 1, 2. I will set my stop loss so in this area. So right here above this tiger tunnel, this one. So here we have an MX, and you see sometimes it's necessary to go very, very fast. This is what happens with the CRB chart. We need to stay focused, so at every second, every moment. So MX1. And this MX1 so has got a profit of, so how many pips? We have 29 pips minus the spread, let's say 3 pips, so plus 26, okay, plus 26. And because on the second unit, due to my stop loss adjustment, I am more than break even. I'm locking a small profit on my second unit, so this trade is a guaranteed profitable trade. So whatever the price may do now, so the trade will be a profitable trade. Now, to close this second unit, there are several possibilities. The first possibility would have been to close the trade here on the IZ line with a movement invalidation. But because the price seems very volatile, I will not do that, because after all, my stop loss is on this level, not too far, so only at 10 pips, 11 pips from the IZ line. So the second possibility would be to wait for the next exit setup. And the third possibility is to wait for the trend to reverse. Of course, we never know in advance which solution will provide the best result. How can we optimize our result? There is no way to know. Okay. The only thing I have for today is my bias is still to the downside for all my pairs I'm displaying on my chart. So I have a short bias. And are we in a context of a true trend? So for that, we need to have a look on a larger perspective on the chart. And if we consider the New York Open, which was in this area, the price has already moved by 79 pips. So this means that we are in the context of a true trend. And if we consider the London Open was even earlier, was in this area. Let me draw another horizontal line. You see, we have this top here. Let's check the size of this movement up to now. So from the top around the London Open to this low here, which is the lowest low. So we have 115 pips. So we are certainly in the context of a true trend. And you know that when we are in the context of a true trend, there is still some time potential for the trend to continue to unfold. We have that magic red rectangle, the red magic box, which starts half an hour before the Frankfurt close and which ends half an hour after the London close. And we know that in the context of a true trend, in 75% of the case, the true trend exhausts inside that red magic box. If we observe the 5-minute chart, we can see that the price is not making a very steep angle. Perhaps now it begins to make a steep angle. So there is a small possibility for this trend to exhaust earlier. Okay. And so what we can do is indeed to wait for the trend to reverse, in fact. And so we can ignore any of the other exit technique which will appear and wait for the trend to reverse. And in the meantime, if we have the possibility to adjust the stop loss, we will adjust the stop loss to lock more profit on this trade. Okay. So let's see. Yeah, my contact is still clearly to the downside for the pound Aussie on a short-term perspective. On a more long-term perspective, so around the weekly perspective, so the bias is to the upside. But for intraday today, it's so still to the downside. So I have no reason to change my mind here about the way I would like to make the exit of this trade. We have an entry setup on the pound Q, but I will ignore it. Not yet, because the price is, this is an example of a counter trend, so mode. So we have an entry setup with this candle, but we are in a counter trend mode, and the counter trend mode is not a counter indication to open a trade, in fact. So most of the setup we have with the max can be taken in a counter trend mode. And it is a REMO. This red candle is a REMO, of course. Nothing in the pound US dollar and in the CAD for the moment, but I'm pretty sure that the same setup will appear. I'm going to check on some news to see if there is some event, especially with the Brexit, because as you know, the Prime Minister Boris Johnson has made a proposal to the European Union, but the European Union reject the UK Brexit proposal, giving them 1 week to make another proposal. You know, I see nothing new. So nothing is changing my opinion about the BIOS, so I'm going to stick with my trade. Now, when you consider with the CRB chart the IZ line for the movement invalidation, you need to be extremely cautious, because this IZ line is very often too much reactive, especially when there is a lot of volatility. Very often when the IZ line is active and there is such a high volatility, the price will make pullback reaching the IZ line. So be extremely prudent not to make too early XXX on the IZ line or inside, in fact, the movement invalidation area. So on the pound Q, the setup has not given an entry, so no trade. So we are still waiting for an opportunity. The price is simply making a pullback for the moment. In fact, it's beginning to range in reality. So another pullback is setup is coming for the pound Kiwi. Is it a valid one? The VIN is not clear. No, it's not a valid one. The VIN is up, so not a valid setup here. Now we have another one which is now a valid setup, but as I have said, I will not take it because of the pound Aussie. And usually the pound Kiwi is a little more volatile than the pound Aussie, but both give usually nice trade, because 2 to 4 times a week they give very, very nice movement. But sometimes the movement starts during the ASEAN session. This is the problem sometimes with these two pairs. Now, with these two pairs, if you don't feel comfortable with the fact that I have divided the range of the bars by 2, you can keep the original size, which was around 11 pips for the pound Kiwi and 9 pips for the pound Aussie. There is nothing wrong with that, of course. And your chart usually will be a little more smooth. It will be smoother, and but it will take more time for a setup to appear, because the price will have to move a larger distance. In fact, twice the movement we are seeing on the chart when I divide the size of the bar by 2. And because we are limited in time with this kind of session, so only 2 hours, so I don't here illustrate how we can make scale-ins. And in the context with the non-farm pearl today, it's not advised to make scale-ins. When we are under circumstances when we do not expect large movements, so it's really wise to strictly limit the number of scale-ins. Perhaps one scale-in may be useful, but making too many scale-ins is an appropriate way to guarantee losses, in fact. So do not force on the scale-ins when you are not sure that the movement will be large enough. We cannot say here that we may be in a possible ETF trend reversal, the fast bias is not making a divergence with the price, because the price is making higher lows instead of making lower lows. So we are not in a context of divergence. So we need to be patient. And for those of you who regularly participate to our scrolling parties, you know that since 1 month approximately, I'm explaining that I'm preparing something. Oh, let me see here. We have perhaps a setup in the pound card. Yeah, we have an entry setup in the pound card, but we are in a concession zone mode for a Remo. Where is my trailing wheels? I don't always display the trailing wheels, but I need to draw my support level. So let's draw the trailing wheels. Okay, my support level must be below this level of the trailing wheel because we are in a Remo. And my support level, I can draw it through this level here. We have the bodies of these two candles perfectly aligning on that horizontal level. There is no other way to draw the support level, so we have to wait for the breakout of this level. So what I was explaining. I'm preparing something to give in real time the bias for a certain number of pairs, usually the pairs we recommend every day in our news watch list. And I'm almost ready to launch the beta test phase, so with the participant in the scrolling party. And let me just explain how this will present. I'm going to show you an Excel spreadsheet I'm using. And in the meantime, I will keep an eye on the pair. I will use a Google spreadsheet. So this means that the members following the Google spreadsheet will need to be validated, of course. Intraday bias, and it will present, let me show the last one I have made. Let's take this one. And whenever the day is closed, of course, I save that Google spreadsheet in a real Excel spreadsheet. But let me check first of all what is happening here. Okay, the price seems to resume the down movement, and we have to wait for the breakout in the pound card. We have a similar situation here in the pound Q as well. So we have some time. So let me just explain what I intend to do. So I will describe the bias in the following way. I will consider the major pairs plus the suggested pairs for the day, and possibly some indices and some commodities. I would like to be able to add also the bonds market, but it's really hard to find a broker giving information about some contract with the bonds market. And so what I will do is the following. So I will consider the possibility for each pair to have a change in their bias several times a day. And so I will start my day as usual around the London Open, and so I will indicate the day, I will indicate the start time, I will use the military format, and I will use the Brussels time, but I can change that, there is no problem. And whenever I analyze and I see a change in the bias, I will indicate it in live condition. And so I will always indicate the direction of the bias and the time when I have seen the change. And the advantage of the Google sheet is, so whenever I will make a modification, you will see that modification in real time. So for example, on the 30th of September, so on the, let's say, the euro pound at 15.35, this represents 5 minutes after the stock market open, the New York stock market open. So I have observed that the bias has changed or came back from an upside to the downside. when the market has opened, or when I have started my session, half an hour after the US Open, the bias was already to the downside. When I will indicate 2 asterisks behind the arrows, this indicates that the bias is running. And so a change will be time-stamped, in fact, that way. And I will give down arrow in the case of a short bias, an up arrow in the case of a long bias, and I will give an idea of the risk of the bias. 3 arrows mean that the bias is strong, 1 arrow means that the bias is risky, and 2 arrows mean that the bias is between a strong bias and a risky bias. So this is the way I will indicate, and you will see in real time what is happening. In such a way you can possibly adjust your trades in the pair you are following, which should be normally the pairs we suggest every day, so from our news watch list. So this is what I'm going to I intend to do. And so I hope this will be clear enough, in fact, and really helpful. Any questions about that aspect of proposing the directional bias? And what I observe is the directional bias, the intraday bias changes 2-3 times, maximum 3 times per day. I have seen during this month, just with 1 pair, that the bias has changed 4 times. So, but in a very volatile environment. So. I will have to discuss with Craig and Chris when we will start. So this activity. So can we start next week or the week after? Okay, we may have possibly here the breakout happening on the pound CAD. So let's see here if I can adjust the stop loss. The stop loss is distant from the present price by 40 pips. It's a good time to adjust the stop loss, and I will adjust the stop loss so here above the max price channel and possibly this tiger tunnel. So here looking a little more profit on the trade, and so looking, so how many pips on the second unit here, so let's say 13 pips approximately. And you see, having the context, so believing into the context, and so developing the patience to follow that context, now we are in a better position than at the moment when we had that exit here. So the price is now really making a lower low. But we have to pay attention. We may have possibly a divergence with the fast bias. Let me check. So I need to display the data window. So view data window here, and we need to check for the slow bias, sorry, the fast bias. And so here we had a low at 181, no, sorry. Here, so 19811, and here 9988. So we are this low in the fast bias is lower than the previous low. So we are not in the context of divergence. So we cannot anticipate an ETF trend reversal. And so what I intend to do with these bias for the pair, so I will consider is, so we will make a test period, so I call that a beta test. So all the participants to the scrolling party can subscribe to this service. It will be free during the beta test, and the beta test may last a few weeks. I don't know how much time, 2 weeks, 4 weeks, so it will depend. I will not promise that I will be present every day, okay? Because some days, personally, 3 hours. Why not 1 hour, Craig? I do not promise that I trade every day. On average, I trade between 2 and 4 days per week. So I will be present. I will propose them when I will trade, of course, because I have also a life after trading. And so after some time period, if you want to continue, if you find that this is helpful and you want to continue to benefit from this information, so we will ask you a small financial participation so for these biases. So, but the aim is you become independent, of course. And believe me, it requires some work to define the bias every day, and to check regularly that the bias is not changing. And this is why, in fact, trading is so a special activity. So, and it's a real business, in fact. You need to be aware of many things. I think I'm not wrong if I suppose that some of you in their life are entrepreneurs. And for those of you who are entrepreneurs, you know that to develop a business, it's not so easy. The customers do not come to you as well. You need to chase them, to hunt them, to find them, to convince them to buy your products or your services. You need to define what is your potential customer. You need to refine all the aspects of your activity to make your activity as optimal as possible. And so you have to consider trading exactly the same way, in fact. And in the future, what I would like to do in the Max courses is to introduce more and more aspects of the global context, in fact. It's the most difficult part. It is the aspect which is the less mechanical, because every day is a new day. Every day brings new information in the market, and there is not a standard way to analyze these information. So we may have possibly a breakout in the pound card very soon, and you see the price continue to go downward. The price has succeeded in the 5-minute time from the pound to cross the Tiger Tunnel. So this gives a good opportunity for the price to reach at least the next mid-Tiger Tunnel, which is never a guarantee, of course, because as you can see, we will have most probably the 358 bar rules triggering as a warning technique. So we have to expect some very soon pullback, but this doesn't mean the end of the trend. Okay? But in the meantime, as long as you are in the trade, so you can regularly check for the size of your stop loss and then possibly adjust it. So I will now adjust my stop loss in this area. I'm using here the combination of the max price channel and the 2 or 3 rule lines of resistance. We have a first level of resistance here at the mid-Tiger Tunnel here, and this Tiger Tunnel, and then the mid-Tiger Tunnel. And so placing my stop loss here gives me enough distance from the price, 24 pips approximately, while locking more profit for the second unit. Now we are at 29 pips minus the spread, so 26 pips. So we are making the same profit on the second unit than the first unit. And so we are guaranteed now to make a better result on the second unit than on the first unit. So now the price is reaching this Tiger Tunnel. For me, it's a bit too early to consider making an exit. I would like to stay longer in this trade. And can I adjust my stop loss? Sure, probably. I can adjust my stop loss now above this Tiger Tunnel, above this max price channel, keeping the stop loss far enough, for example, 5-6 pips. So in this area would be nice. So I adjust my stop loss by a few pips. How many pips? 4 pips. But 4 pips is 4 pips, okay? Because now I'm looking on the second unit. How many pips? I'm going to lock So 32 pips minus the spread, let's say 3 pips, the pound OZ and the spread of, or 2 pips, so 2 pips, so 30 pips. We are looking 30 pips, okay? This means that the profit when I will make the execute will be larger. It will be 30 pips in the worst case scenario. What I like to do with my stop loss when I'm sure that I'm approaching, and this is imminent, I'm approaching the moment when I will have to close my last units, so to make the X66, then I tighten my stop loss a little further. So just in case of, because if the price suddenly see an increase in the volatility and the price jumps very fast in the opposite direction, at least I have a tighter stop loss, which will give me a nicer profit on the second unit. So when you feel that your X66 is coming, then you can tighten your stop loss following the max price channel. And now when you trade that way and you make only one trade during the day, just one trade, you see here we will have just one trade, okay? And let's suppose we close the second unit on the stop loss. Let's consider the worst case scenario. The second unit will make here, how many pips? We have 37 minus the spread, so 35 pips. Let's write on the chart here 35 pips here, plus 35. Okay, this means that the two units would make a profit of 61 pips. 61 pips in this case, plus 61 pips, doesn't seem a lot for such a pair, because after all the trend has started around the London Open, so we have missed a large portion of the trend with the possibility to make the scalings. But don't forget that the stop loss here was how much? 21 pips, I think. Let's check. I think it was 21. Yeah, 21 pips. You see 21 pips here. And so this means that the reward to risk ratio is, so 61 divided by 42, 1.42. This means a reward to risk ratio here plus 1.42 without any scaling. Okay? And this is the minimum profit we will get. Now, if you consider a risk of 2%, this represents, so for a risk of 2%, so if R equal 2%, so this gives a profit of how much? So we take, of course, 1.8242 times 2, so plus 2.84%, which is not bad. Making a 2.8% profit on the day with just one trade and around 2 hours, it's well paid. If you use a smaller risk, for example, just a 1% risk, it's still 1.42%, which is still also a nice profit for the day. So in fact, you should never consider how many trades you can make per day. It's the quality of the trade which is important, and it is the way you will get consistent in pinpointing quality trades and a quality excellence, the excellence in your trading process. And you have seen with just one trade, knowing the context, understanding the context, a nice result. Don't forget that if you are able to make every day of the week, if you trade every day, which is not necessarily easy, okay? If you are able to make on average just 0.5% profit, 0.5%, at the end of the year with the compound process, you multiply your account by 3. By 3, if you make every day on average 1%, at the end of the year, in 1 year, you multiply your account by 10. That's huge. And so if you are able to make on average between 0.5% and 1% per day, you can see that you can multiply your account by a factor between 3 and 10, which is huge, with a profit which seems to be small for one day. But in fact, 1% per day is huge. In fact, it's huge. And I have not considered here the possibility to make scale-ins. Okay? To make scale-ins, it's better to consider when the trend starts, so around the London Open, most of the time. Not all the trends start with the London Open, of course. Some trends start around the Tokyo Open, sometimes in the middle of the ASEAN session, sometimes around the US Open, due to the circumstances, due to essentially to the news releases, in fact. But don't be afraid if sometimes you don't make trades. It's normal. What is important is not the quantity, but the quality. It's better to trade less, but way smarter. And this is why with Craig and Chris, we are thinking a lot about, and I'm working a lot on this project to prepare also one course, a specific course on the context with the fundamental and the macroeconomic aspect, how to consider them to have a better idea of the direction we have to trade. So the bias, in fact, the directional bias. Okay, any questions about all the details, all the subject I have described today? And I hope you have enjoyed this aspect. I'm sorry for the beginning of this session with the MTM. I will have to investigate what has happened with my MTM. So I don't understand why it is not working today. But any questions about what I have presented today? No questions, okay. All clear. Or if all is clear, Baldev, that's nice. Oh, that's fine, Baldev. That's nice. Congrats. Happy puppy. With 60 pips, you can buy a bunch of threads for your puppy. You will. That's nice. It's nice to pet an animal, so they are wonderful. I like dogs and cats. Unfortunately for me, I have an allergy for cats and dogs, so, but I love them. So if there are two things you should keep for today is always try to define your daily bias. This is very important. Even if you are wrong. Sometimes I'm wrong, and sometimes, of course, I miss nice trends, but we are not perfect, and we can never consider all the elements which define the market sentiment. And the difficulty is even higher than we can imagine, because the objectives of the big boys are not necessarily the same. Sometimes they converge, but sometimes they completely diverge, and this makes, in fact, understanding the context a difficult task. So, but making that exercise is essential. And if you are wrong, try to understand why you are wrong. What have you missed in the correct interpretation of the context? And believe me, over time, you will learn to have a better bias. You will improve your bias understanding, your context understanding. And then when you trade in agreement with the context, this is a nice way, in fact, to practice the patience aspect in the trade, to try to exploit the trend at best. Jim was used to say to milk the trend at best. So, and this is an illustration. I was confident in my context, and so I have decided to stay in the trade until the trend reversal. And you see, I have been lucky enough to be right in the context, but this pays. And if you are regularly right in your context, believe me, you will make nice trade. Every week should be profitable, in fact, in your trading aspect, in your trading activity, every week. Because there are enough trends per week. If you follow 2 or 3 pairs per day, you will have between 6 and 12 nice trends to exploit each week, even more. So between 2 and 4 per pair. Okay, so this means between 6 and 12 per day. Sorry, per week, per pair per week. So between 6 and 12 per week. Nice trend to follow. And what I call the trend, of course, in this case, are the true trend. A true trend being a movement of more than 60 pips. And now when you see that your trading session is progressively approaching its end, so you can profit to tighten a little bit your stop loss. Here I will still keep my stop loss along the tiger tunnel. I will still be above the max price channel, but I want to be far enough to give me a chance to exploit a larger movement should the price continue to drop. And so I will just adjust my stop loss here, catching how many more pips here, not a lot, but each pip will count. Now let's say 3 pips. So instead of making 38, I will make 30, instead of 35, I will make 38 pips. And so here, 34 pips, 34. And so my minimum reward to risk ratio will be now how much? So 64 divided by 42, 1.52. 1.52. Okay? And this will be the minimum result. The real result will be where the XXX will be made. And so here this means a result of 3.04. And here 1.52. Not bad. A day well paid. Okay? Now if we observe the other pairs, I have said I will not take the pound cat. You see the pound cat is reversing because in fact we are approaching the end of the day. What does this mean? When we are approaching the end of the day, what do you believe the big boys are doing? They are protecting, they are either hedging their position or they are closing some of their position. And so the ingredient for the trends are progressively disappearing from the market. The vast majority of the liquidities have been handled by the big boys in the market. And so there is no way except for the retail traders to continue moving the market. But the retail traders don't have a big power in the market. So this is why that timing aspect is extremely important. So you have to take that into account in your understanding of the context. Let's see what the price will do in the next 5-6 minutes, and after that we will wrap up this session. I don't know for you, but for me these 2 hours have passed very, very quickly. So time is flying very fast. There are some days when the market is very active. I begin my trading session, let's say for example for the London Open, and so a few minutes later I observe that we are at the London close, and so the 9 hours for me was as if it was just a few minutes. So the concept of time is really a strange concept. The perception of time is not equal depending on the circumstances. And of course, you can take profit of the calmer period in your trade to try to keep you informed by observing by reading some headlines in the newspaper and some important website, as I have mentioned, for example, Reuters, Bloomberg, the Wall Street Journal, the Financial Times, the news section of Forex Factory, or any similar section in other economical calendar, because you may have very, very important information which should help you to confirm your bias or to change your bias. And you can do that rather regularly when you are safe in your trade and when you have more time. Okay, Mark, congrats for your 1% profit, and have also a nice weekend. And you can see that with the weekend approaching, so we are the last day of the week, we are approaching the end of the day, the end of the week, so normally, with no big surprise in the non-farm payroll, we should see the market calming down. Most of the time, not always, sometimes the trend can resume or the trend can reverse, but most of the time the trend will exhaust, the price will calm down. So usually for that specific day, the second half of the US session is not worthwhile to trade when the session is usually a natural session for the pair. For the pound Aussie, the second part of the US session is not a natural session to trade. So normally you will have to consider to close your trade very, very shortly. I will do that now just to give you an idea of what could be the result of the trade. So the second unit, so here on the stop loss is making so 43 minus 2, 41 pips. So here we are at 41. We improve the result by 3 pips. 3 pips is 3 pips, you will see the impact. So 41 and 26 is 67. So 67, giving a reward to risk ratio of 67 divided by 42, 160. Where is my mouse? Oh, here, 160, which represent a profit of 3.2% with a 2% and a 1.6% with a risk of just 1%. So a nice result anyway. Okay? Well, that being said, so I thank you very much for your participation today. Bye everyone and take care.